Good morning, my all dear class 11th students. Today in this video we will discuss the chapter Capital and Revenue. So before starting the chapter, let me tell you that what we will discuss in this chapter. We will discuss in this chapter capital and revenue expenditure, capital and revenue receipts, capital loss and revenue loss, and then we will discuss capital profit and revenue profit. This chapter will take almost 2 videos, and in 2 videos this chapter will be completed. So first of all, capital expenditure and revenue expenditure. Before starting anything, let me simply tell you that what capital related items and what are revenue related items. Capital related items means long term items. Those items which will be with you for a long time. If you have purchased a building, so that building will be with you for a long time, so that is your capital related expense. If you are paying salary to any employee, so that salary is recurring expense, means you have to pay that salary every month. Okay, so that is revenue expenditure. Okay, any expenditure which is incurred in acquiring or increasing the value of the fixed asset, such as amount spent on purchase of land and building, plant, machinery, furniture, etc. So these are capital expenditure. Capital expenditure which result in the acquisition of the fixed asset, means we have acquired a fixed asset. Then capital expenditure in connection with the purchase and erection of the fixed asset. If we have purchased a machinery and we have paid 10,000 in the installation of that machine, so that 10,000 will also be the capital expenditure. Okay, because that is long term expense. Now, expenditure which results in the extension, if we have spent any amount in extension in the extension of the or the improvement of fixed asset, by that our earning capacity will increase, it will be our capital related expenditure. Now let's come to the revenue. Revenue expenses means day to day running business. Then suppose we have spent something amount in whitewashing of the building, that will be revenue nature. Basically, capital nature items are those items which will give you any long term satisfaction, and revenue nature items will give you short nature satisfaction, means they are recurring in nature. Okay, now there are some examples of capital revenue expenditure: wages, carriage, raw materials, repair, legal charges, interest, preliminary expenses, brokerage, advertisement, development expenditure. These expenditure are of recurring nature, so they all are revenue expenditures. Okay, now deferred revenue expenditures. This is very important. What is deferred revenue expenditure? Deferred revenue expenditure are those items whose amount Deferred revenue expenditure are those items whose amount is far more greater than any revenue expenditure. They are actually a revenue expenditure, but we treat it like capital expenditure, because if we treat the whole amount in a single time, there will be a lot of impact in our profit and loss account and balance sheet. Second thing, deferred revenue expenditures help us in upcoming years too. They not only help us in the current year, they help us in the upcoming years too. So this is treated as deferred revenue expenditure. Heavy advertisement expenses, heavy repairs, expenses incurred in removing the business, research expansion, means these expenses are in nature revenue expenditure, but due to the amount they can't be treated like revenue expenditure, so they will be treated as deferred revenue expenditure. Okay, so in the upcoming video we will discuss the differences between capital and revenue expenditure, and this chapter will be completed. We will do 1 or 2 illustrations, and this chapter will be completed. Till then, you all are requested to learn the theory of this chapter, because this is very important for your exams, and if you find any doubt and difficulties, you can ask. We will be there to help you out in all your needs. Till then, bye bye students.